Hello and welcome to yet another episode on the Mission Shunya podcast. Really glad to have you tune in to the podcast every other week. Hope you are enjoying the content produced on this platform. And if that's the case, please take time to spread the word. Would you be interested to tell more about your particular interest? Feel free to get in touch across the social media channels. The handle is @MissionShunya. It will give me a better perspective of the listeners who tune into the show. You can also drop me an email, missionshunya@gmail.com. Renewable energy is one of the themes as we transition to the zero carbon economy. And how we enable commercial and industrial players switch to this source will be a key question to ask. Commercial and industrial consumers are very clear in what they want, and they set their expectations straight away as they evaluate alternatives to the power procurement. In fact, questions from them range from the obvious one of what is the price per unit of electricity to the other end where they question the reliability and options for round-the-clock availability. That is the value proposition in energy as a service. So on this episode, we explore this sector in detail with our guest who represents Renew Power, India's leading renewable energy developer with a large portfolio of assets in wind and solar all over India. The main interest in initiating the conversation was to know more about what else can companies like Renew offer to industries. Is it time for energy storage, or should we take the virtual power plant idea really seriously? So without further ado, let's hear from our guest, who is...
Hi, I'm Siddarth Krishna Kumar. I handle business development for Renew Power's private business in South India.
Now, Siddarth, you've been in the clean tech space for quite some time, and one of your primary focus has been to see how you can convert existing commercial and industrial spaces, sector, industries, and motivate them or encourage them to shift to renewable energy. So, how has this progress been over the last few years from your experience?
So basically, when we started off, or rather when I started off in 2014-15 in the sector, there was a lot more selling involved. It was a mixture of awareness and benefits and showing a mirror to what people are doing in Western countries, rather than any hardcore selling. So you contrast that with today because of the price fall across the board, whether it be wind or solar or any other renewable resource. It is sort of graduated into a no-brainer for any corporate. Leave aside the environment benefits, they do see the financial incentive of opting for renewable power. Obviously aided by a lot of government incentives and the general thrust by the government, but on its own itself, it's become viable. So that has been the shift. I think it's happened in a very accelerated period of time. I don't think any other sector has gone from the boundaries of society to such a critical resource and dependency as much as renewable has over the last 5 years. And so it's been a very exciting time to be part of the sector, and thoroughly enjoyed that journey.
You did mention about the solar procurement cost or the energy procurement cost, whatever the industries are paying. But I mean, there is also a small trend or other side to it where industries are looking at it from another perspective. So what are the other kind of benefits or other things that the industry think through when they opt for renewable energy? What are the other things that they look at?
So see, early adapters were MNCs. They were companies with the headquarters outside India. So I think the initial wave of customers who decided to opt for renewable were people with worldwide mandates. So they were people like, just to give you an example, one of our clients, Toyota. They have a worldwide mandate to go zero carbon by 2050. So this was brought about, the initial push was through their worldwide headquarters. But as you move on, there are a lot of Indian companies also who have signed up for voluntary commitments. A good example is right here in Bangalore, Infosys, who has signed up to go completely 100% renewable in the next 10 years. So these are kind of commitments that the board and the management have signed up to, with the knowledge that obviously you want to be seen as a responsible company, but also that a lot of foreign investors and maybe increasingly Indian investors want to invest in companies which are environmentally responsible and have ESG targets. So those have been the second wave of customers. The third and the larger pool of customers are your everyday companies who particularly are not interested in environment. Obviously, they do their compliance and they're very well run companies, very profitable companies, but they just see the bottom line. They see that procuring solar is a much cheaper option than putting up a coal plant on their own. So these guys have come on board not with the intention of outside projection, but internally itself, it makes sense for them. And I think in the long term, those will be your 80%, 90% of the customers will be that, because you're running a company. Finally, one of your major things is to give cash to your shareholders. So renewable energy does achieve that. So it's become a very CFO driven, management driven initiative nowadays.
It's an interesting way in the way that you classify the customers and or the perspective of the customers across the different categories that you mentioned. I'm particularly interested in the second set of customers, second and probably even the third set of customers, because I mean these are like unprecedented times. Industries are coming out of. I mean anyone's coming out of post COVID is going to be an unprecedented time. So how do you think? I mean I'm sure it's going to be a tough ask, but how do you think companies will come out of this? Do you think their targets, their ambitions to be responsible, or their intent to procure power from renewable, will this go down? Do you see this going down, or do you think it's going to be accelerated?
So basically, initially, to be honest, we were not sure. I was not sure what is going to happen, because once this kind of once in a lifetime black swan event occurs, people are just not sure. I mean, they don't know whether the company is going to run. What is, I mean, 5 year plan becomes 5 months plans. People just want to ride it out, make sure that the company is still a running concern. But once we get through this phase, by probably end of the year, people will realize that the value proposition still stands and is probably stronger. I mean, even during this lockdown that we had with the power demand going down, renewables were the one powering the economy. I mean, the proportion of renewables that the country was consuming went up, and it was the coal plants which were stepping down. So, I mean, the country has seen that renewables is a mature technology now. So, both on the social side as well as the corporate side, I think people will come around again and start exploring it in a much more serious manner.
You do throw about an interesting perspective. I mean, the times now are where the power demand is low. So, I mean, discoms and other utilities are going to face an interesting dilemma, because discoms were generally not very enthusiastic to support renewable energy, or say any industry putting solar on their roof and reducing the net demand from the utilities. Now, with this kind of scenario where utilities are stretched financially, they were already throwing in a lot of hurdles in approving projects, approving industries to offtake power from renewable sources. Do you think utilities will be a even bigger hurdle in enabling this transition going forward?
See, if you just take a step back, I think one must recognize that all our, not all, but 90% of our distribution companies are government owned. We have few exceptions like Reliance and Tata and Torrent Power, but most of them are owned by the state government. It is a good and bad. I mean, there is pros and cons to that. Pros are that since renewables in this country has been a top-down initiative, which the prime minister came in and he expanded this target, so that has filtered down to the state level and to the local level. So discoms in that way have embraced it, because it's a social mandate for them to, you can say, green their power supply. For instance, we were 90% privatized, maybe companies would have had to, they would have asked for a lot more incentives. They would have made sure that they're still getting their ROE. But discoms, I mean, they had to. I mean, it was a political decision, so they have taken to it. So that has definitely helped. And since we're both in Bangalore, I mean, you've seen the support that Karnataka government has given to make Karnataka the number one state for renewables at present. So that is the pros. I mean, discoms have definitely supported it, maybe unwillingly, but without their support, I don't think we would have reached this stage. The cons are obviously that being a state-run organization, efficiencies are not that great. There is a lot of losses, whether it be financial losses, technical losses. And I think everybody agrees that they have to fix that problem. I think at least the central government has given a lot of carrots and sticks to discoms to fix that problem. But again, the political aspect of it is there. You need a certain section of society which gets free power or subsidized power, because you have a social responsibility to them also. You don't want to burden them with high costs of power. And I'm talking about, farmers and the urban poor. So I think that balancing act will now tilt towards the latter aspect to maybe cut down on any renewables that eat into the revenue stream of the discoms. And I think we, as private developers or solar installers, we just have to work around and create some innovative solutions so that the discoms interests also taken care of, and they are also perceive it as a win-win situation for them.
You do mention about bringing out innovative solutions, and earlier in the conversation, you do also mention that companies look at like value propositions. I mean, in these times, as a company, what are the kind of innovative solutions or the value propositions that you take it to clients, and what are things that you put on the table for them to choose?
So I think to get over the discom hurdle, if I can call it that, I think just to make an admission, I think we should have done more to engage with the discoms, because we always knew that this kind of revenue loss is happening, and we've seen it in US. This has happened. US, in fact, is much worse because the utilities are owned by private investors. So they have, just to take an example of rooftop solar, there have been many states which have, from the outset, not allowed net metering, similar to ours, but in a much more transparent and aggressive manner. So I think there is no right answer to this. What is the solution to get the discoms on board? But what we are doing proactively is to look at the next stage, right? I mean, energy storage is something we believe can help customers. It can help us and help the discoms as a technical solution, whereby you're not discoms are not paying for the facility of taking back your excess power, which you call banking or net metering. You're storing that power in house. You're paying the cost for that, and you're also getting the benefit out of that. You get readily available power for when you want to use it, which solves the problem of intermittency of renewables. So, storage is something we are obviously exploring quite a bit, and there are other solutions we are offering to clients to help them get the benefit of renewable power without actually dealing with the regulatory uncertainty which is prevalent.
Storage is definitely a good value proposition, but I understand storage as it stands right at this point in time kind of would not be a economically viable option. Or am I wrong in that for industries especially? Do you think it makes a viable option now?
So, like anything else, you have to find your early adopters, people who believe in the technology. So, you're right in saying that it's not a uniformly viable solution at present, but we do see pockets in niche areas where it makes a lot of economic sense. Just to give you an example, there are many industries which are located slightly outside, or maybe in the rural areas, where the only source of supply is maybe rural feeders, where they don't even have a 11 kV or 33 kV line which can assure them a standard of power which they require to, say, have a precision manufacturing unit set up. So these kind of people, I mean, for them, if they're running off DG sets, because that is the only other option for them, they end up paying anywhere between 16 rupees to 25 rupees per unit for a unit of electricity. There, in those cases, definitely storage is a much better option. In fact, there are cases, not too many, but there are slowly people who are coming around to this idea. And I mean, there are many benefits. I mean, for instance, I mean, diesel is a polluting fuel. There is noise. Storage solves all of those problems and also gives a cleaner, more economically viable solution. So these kind of use cases, if you do see, there is definitely no question about viability. But maybe across the board, there is we still have some way to go for that.
We do understand there is viabilities in some pockets, but as a company, do you also how do you balance it out against the risks involved in supplying industries in rural areas? I mean, I'm sure there must be some risk assessment that you also undertake, and for matter of fact, kind of know that you wouldn't sell the solution to any or every industry because of the risk profile. How was it few years back, and how is it currently?
So, I mean, speaking about client selection, we are constrained by certain factors. I mean, we do raise debt to execute most of our projects. So, little bit about the lending. As you know, banks have become very strict. Last 3 years, I've seen a lot of non-performing assets. So they are very keen that any project we would set up or sell power to, that off-taker, that risk should be minimal. That means he should be a profitable company. He should be paying his loans. Good promoters, good corporate governance. All these things are taken into consideration. So definitely that does constrain us in to the kind of consumers we can offer solutions to. But I mean, there are also other uncertainties, right? I mean, regulatory risk, for instance, that's always a question mark. States have increasingly become hostile. They're being very capricious with their policies. Recently, AP has started renegotiating renewable contracts, and this is probably part of a growing trend, which even investors and lenders are realizing. So to mitigate that, I think this is an energy storage option or virtual PP option that is mitigating that risk. So it's all about balancing risk, and for a certain level of risk that you're willing to take, I think your financial return should be consummate to that.
Now, before we get into like VPP, recent projects that were sanctioned in India went with, say, round the clock power. And people generally now feel like renewables can supply round the clock power by having a mix of wind, solar, and storage. How do you think commercial and industrial clients will probably want such kind of solutions? Is it economically or technically viable to provide that for a large industry or large industrial cluster?
Yeah, so so the kind of clients that would be interested in an RTC solution are obviously very large power consumers. By this, I mean large steel companies, your cement factories. These guys would be the ones who would be interested in your RTC solution, because RTC, unlike solar, it is not exactly modularized. I mean, solar you can always build out from a 500 kilowatt to 500 megawatts, but your RTC solution, because wind is involved, you need a proper site. It's dependent on getting. You have to put up your plant where the best wind resource is there, and build solar around that. So there are certain constraints to size. You can't make a very small sort of RTC plant. So I mean, we are thinking big on that. I think those kind of solutions definitely will have a market with these large power consumers who have a constant load, right? I mean, you're talking about 50 to 100 megawatts of heavy power demand, which at present almost certainly has been catered to by a captive coal plant, which they would have at site. And slowly, these kind of customers are realizing, getting coal, the logistics involved with that, with the prices. I mean, most of this coal is imported from Australia, Indonesia. So that whole supply chain risk is becoming a little bit hard for them to manage. So renewables, obviously, there is very little raw material risk. So they see that as a positive, and obviously, like I always keep saying, I mean, price and economics is the only thing that's going to drive it. So we are at a point where we can match or even better that their captive power cost.
We'll come back to price in the end. But now you didn't mention about virtual power plants. Virtual power plants, again, it's a trend that's picking up globally. How do you see that being adopted in India? And how do you think your company is well suited to kind of get started with that?
So yes, I mean, virtual PPAs, like you rightly mentioned, started off in the Western markets, slightly mature markets. Again, started with companies who wanted to go 100% renewables, but due to locational constraints or regulatory constraints, they could not achieve that. So we're talking about your household names like your Apple and Amazon, Facebook, Google, these kind of people. So virtual PPAs in the Indian context, like I said, avoids the regulatory risk. Just to give you a small introduction about what it is, I mean, it's called different things in different countries. I think in the US, it's called contract of differences. It's called financial PPAs in some countries. So essentially, here in virtual PPA, there is no physical delivery of power. There is no actual power contract that is signed. Consumer is basically giving us a insurance or a hedge against power prices, or taking a hedge himself. So we set up a power plant in the knowledge that I'm going to get a minimum price from my off taker, my client, and he gets the benefits of the green credits generated from that plant. So this is the way. I mean, we are not really supplying power to him, and we are avoiding that transaction. But the customer is still getting the green benefits or the renewable energy benefits that he wants, and he might have a mandate which is driving that. So that is the way we're looking at it. I mean, already since we have world class investors, we have definitely accelerating our way, and we have the best practices from other markets. So we are also very aggressively looking at this option as well.
That's really interesting. But I mean, just from a little background perspective, I mean, a similar instrument, like although a little different for a different context, the REC, renewable energy certificates, were introduced. Those kind of didn't take off for different reasons. But how optimistic are you about virtual PPs?
Yes, I mean RECs were a good concept to introduce that. I mean RECs obviously came about because there were renewable purchase obligations imposed on heavy power consumers, and again the same thing happened. They could not realistically or physically procure power. So, but there were a few things with REC. I mean, they were not very liquid for once. I mean, they were not getting cleared at a viable price for most buyers. So this, I think, eliminates all that. You're just letting the market take over. You're doing a bilateral agreement with consumers where both the economic interests of the parties are taken care of. And so I think that way it will be more easier. I think so. That's what we are hoping. Obviously, we'll be in a much better position in the years to come. But there will be a market for this that we are definite about.
That's good to know, Siddharth. On a final note, price is one key thing that we can't have a discussion without discussing the price, because price is the trend that everyone asks for, especially the C&I customers. How do you see that? Do you think the prices are going to stabilize, or by various options like storage and round the clock power, do you think prices are going to increase to an extent and then stabilize going forward?
So there are a couple of interesting trends with prices. I mean, as you well know, I mean we are dependent on China and other countries for most of the components of at least a solar plant. So going forward, I think just in general, world is going to close up a bit. There are going to be trade barriers. China, especially, there is a lot of an undercurrent of sort of diversifying the risk from China. So I think that will have an interesting impact on price. It will stabilize. I don't think it will go down as sharply as it's been coming down because of that. And I mean, it has. I mean, most things, most commodities, most things in the world, they don't infinitely go down. There is some point or some time at which they do plateau out. So I think that is a good time. But again, I'm no expert on the commodity and the whole supply chain, but that is what I think may happen. So that will have a moderating effect on the power prices here in India. But I think so. There are again other trends happening, right? I mean, you have energy exchange, which is becoming more and more efficient. You have real time markets, which are starting. So I think the end customer, he might not again see a huge decrease in the price, but he will see a lot more options. So he will see a lot more use cases where he can take advantage of buying power from outside, and especially renewable power. So he might, like you said, storage is an option. He might opt for, if he's not sure about his business, then a short-term, day-to-day trading makes a lot of sense, and there is a market growing for that. So as an end consumer, I think the options have increased. Maybe price won't go down that much, but definitely it's a good time to be a buyer of renewable energy.
That's a very good note and a positive note, kind of, to sum it up. As you rightly mentioned, real time markets are kind of picking up, and commercial and industrial clients are getting other options also to see. I mean, large players definitely have that scale to leverage the price, and medium to small scale players have other options that they can definitely choose. So that, yeah, thanks for coming on the show. It's been an absolute pleasure, and it's good to know the kind of new concepts that you're bringing to the market. So good luck with all the new initiatives in the space.
Thanks, Girish. It was a pleasure. And yeah, hope the market picks up and we are booming again soon.
Well, as Siddharth pointed out in the conversation, Solar procurement has moved on from being a global, headquarters driven ESG target to being a financial decision across boards at this point in time in industries. The price decline will cease in a while with more emphasis on consumer value and for the value proposition in energy as service. Of course, amidst all this transition, there is going to be a certain amount of off-taker risk involved, and the regulators will definitely play their cards from time to time. Also, energy storage is moving from being a solution for the niche sectors to a mainstream alternative. The growing interest in round-the-clock power at large scale will also drive the commercial and industrial players to seek round-the-clock power for their facilities. But will this be a viable option? Are virtual power plants the real solution for companies to go 100% RE? I mean, all these questions will be asked, and the answers to all this can only be seen in due course of time. But let's remain optimistic as ever and do our bit. Talking of doing our bit perfectly leads me to this week's action item towards Mission Shunya. Have you heard of the phrase, what can't be measured and monitored can't be acted upon? Well, that's true for energy as well. So when was the last time you looked into the electricity bill of your household? Take a few minutes this month and look into the details and see how much of units of energy you consume. See the pattern over the last few months, and I'm sure with such an exercise you will be able to identify some patterns. If your consumption is on the higher side, plan to replace some gadgets, replace lighting, which is an easy option, with LEDs, or maybe be a little more conservative and turn off devices when not in use. The intent is just to enable you take the first step and see what's your electricity consumption. But if you want to know more about this and know about the particular tips and take immediate action, well, I encourage you to check episode 7 of the Mission Shunya podcast. It should appear on the playlist on any platform that you're listening to this show on. So again, that's episode 7, 3 steps to live an eco-friendly lifestyle. So I hope this tip and the episode in general was of use to you. If yes, again, please take time to spread the word. It could take 30 seconds to 3 minutes. 30 seconds to just share the episode link to 3 people in your network, and about 3 minutes for you to write a review on social media and tag Mission Shunya. The handle is at Mission Shunya. So I hope you consider doing that. With that, signing off, this is Girish Shivakumar, and thank you for listening.